Looking at these numbers, Richard Jones, unemployment, record lows, the labour market outperforming, the PMIs are absolutely stellar, and I still can't make sense of a bund yield on a 10-year in the 40s, just 0.4 something percent. When does that dynamic start to kick in where the data really starts to matter for the bond market?
Well, I think we need to see a pickup in inflation. You know, I think you spent a lot of time talking about that in your previous segment, and I think that's one of the issues, in fact, the key issue here in Europe is that we need to see some wage growth. We need to see underlying inflation start to pick up. As you said, the Bundesbank, I think German central bankers are very confident that's coming. Maybe others on the ECB less so, but there is a general feeling on the Governing Council that we could see some upward traction in inflation this year. And I think that's going to be the key thing, John.
Jeff Kleintop, is that going to lead to a significant repricing of a 10-year bund?
I'm not so sure. I think that the ECB is going to go very slowly in the tapering of their QE program. We know it's scheduled to end later this year, intended to end later this year. But look, that's going to be something that they're going to be very sensitive to. If they see a sharp move up in rates, they may not, they may not consider this path of tapering. So I think they want to be very cautious about that. We're still very early in let's say, a breakaway trajectory for the economy there, and particularly the rates of inflation. So not the all clear yet for the ECB.
Yeah, we've had at least a year of happy talk from market participants about the prospects for European assets. Looking at the situation, Richard Jones, the data's better, the sentiment has improved, but the ECB in many ways have tied the hand of the Governing Council, with President Mario Draghi saying this is it through to September. Do you anticipate at all any kind of dissent that sets up a conversation about rate hikes anytime soon?
Well, I think the ECB has left its options open in terms of the rhetoric it employs this year. We know what the timeline is on QE. We know what they're doing for the next 9 months. And they can actually talk more hawkishly, more dovishly, depending upon where they see the most appropriate sort of narrative taking hold at any given time. Rate hikes are probably a 2019 thing, John. I don't think that's something that they're going to consider in 2018. And it might be later in 2019 than a lot of people are anticipating right now.